Hey traders, Raghee here, and in this free video let's talk about a few things that are probably some of the more common questions that I get in the chat room and when I'm doing interviews or whatnot, and that is what is driving this market. And one of the things that we're going to look at as we take a look at this S&P is just kind of the stages of this market that we've seen, and these are things that we've discussed for really the past, going on 6-7 months. So I'm going to start here on the left side of the chart. And this was an environment, gang, where the market really started to recognize the macroeconomic environment. In other words, what was going on with inflation, what was going on with growth, what was going on with central bank policy, what was going on with monetary supply, money supply. And so when you take a look at inflation, when you take a look at growth, central banks, money supply, this was actually a kind of threshold at which the market said, look, we're finally noticing that there are a lot of things happening in Europe, in China, in the US. Regardless of the stock market reaching a new high, we saw high beta, high momentum stocks start to roll over. Think about Netflix back in July of 2018. Think about what was going on with markets like crude. Think what was going on with even money supply. We were still looking at rates being hiked, and we were still looking at the rollover in the balance sheet, the rollover of the mortgage-backed securities and treasuries. And that is a contracting or decreasing money supply. So eventually that just took its toll, the lack of liquidity on the equities markets, and we started to see them move lower. A lot of folks ask me, okay, Rog, what happened down in here? Why, within the context of 16 days between two speaking engagements, did the head of the Federal Reserve, in a non-Federal Reserve event, it was a Bloomberg, I believe, interview that was televised, pivot, and what had to be really a record? It was a 16-day turnaround, and a very informal, unorthodox way of communicating to the market that rates were going to stop being hiked and we would keep a larger balance sheet. What happened in this span of really 16 days as the markets were selling off? And there's a lot of speculation, but I think really what I've come to find out, we had talked about this in the chat room in the days that followed, is that obviously think about what was happening with pensions. Think about what was happening with the credit market, and you could really now, because this is much more openly talked about, but now as we've kind of accepted why he pivoted, we had pensions that were down significantly during this sell-off. Credit markets were starting to really seize. It was an ugly time, and you better believe a guy who kind of built his chops in the Carlyle Group. Go Google the Carlyle Group. This is a capital markets guy. He was definitely hearing it from his buddies. There's a little red bat phone somewhere in his office that I'm telling you was ringing off the hook. All right. Now you might say, well, Rog, what does that have to do with technical analysis? The V bottom that we saw, boom, and then we saw what happened after that. Right. This V bottom, these are typically very unnatural things. What would have been a little bit more natural was for this market to put in more of what's known as a W bottom, where we go back and maybe retest that level and then finally move up again. That would be a little bit more natural. This would have given us a pretty reasonable distribution market trend. And instead we had a V bottom. That's, again, pretty unnatural. So the market started to rally on expectations that the Fed would remain accommodative and eventually we would get rate cuts and that earnings aren't awful, money supply is increasing, and oh yeah, US China is looking a little bit better. And that was the fuel that powered this higher. No longer the macro of this environment, and now a whole lot more driven by central bank policy. What's happened most recently? And that's the question I'm getting now. Are we still dealing with central bank policy? Of course. But what's happened is those narratives from the central bank kind of hit the mute button. Even though Fed Fund Futures, which is the FF futures contract, even though Fed Fund Futures are factoring in a September and December rate cut, okay, we're not really hearing this out of Fed members. We're not, even though this kind of not well talked about, not well known contract is saying, yeah, we could see the central bank rate at 2%, by the time we get to December of this year, we're not hearing it. We need to hear it in plain English from Fed members, and they're not doing it. Most especially from Chairman Powell, as we call him in the room, Powell, right? He needs another Powell moment to communicate to the market what their plans are. Part of their model, by the way, and this is interesting to note, part of their model, the central bank model, has been, and the members have mentioned that, is that their model includes not a prolonged trade war, but this trade war shifting pretty quick. And if they're going to have a reason to change their mind about when they're going to possibly cut rates, that trade war could be part of what starts to instigate this. Okay, so we're seeing the trade war ratcheting up. U.S. and China, U.S. and Europe, most recently U.S. and Mexico. So that brings me to sort of the punchline here, if you will. And that is heading on over to next week's economic calendar. All right, I get down to Tuesday, and I believe it's on this calendar. But you get down to Tuesday, and I believe he does, Chairman Powell does have a speaking engagement next Tuesday, I believe it is. We'll talk about this more on Monday, but I'm pretty sure when you move out to next week, and I'm going to have to pull that up. I have this written down from somewhere. But when you take a look at the economic calendar, I believe he's speaking on Tuesday, and if we don't hear, I think it's like an informal discussion, but if we don't hear that he's willing to at least open the door to some discussion of a rate cut, watch how quickly this market throws a tantrum. So heads up, lots of interesting stuff early next week. I'll talk about it in the next videos on Monday and again on Tuesday. In the meanwhile, enjoy your weekend, and I'll see you in the next update.